Administration will downgrade relations with Crown Prince Mohammed bin Salman, the country's de facto ruler. The U.S. has already put a hold on some key weapons sales to the Saudis. Fox News reports that Rush Limbaugh is dead. The conservative radio talk show host had stage 4 lung cancer. Limbaugh told his listeners a year ago that he was receiving treatment for the disease. The Rush Limbaugh show began in 1988. He played a consequential role in conservative politics, considered polarizing by some and icon by others. Rush Limbaugh was 70 years old. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It is 1 p.m. in New York, 7 p.m. in Berlin, 2 a.m. in Hong Kong. I'm Matt Miller. Welcome to Bloomberg Markets. These are the top stories on the Bloomberg terminal and from around the world. We are following 13 Fs, confirming that the COVID pause is over. Activists are fully funded, healthy, and rebooted their portfolios at the end of 2020. So what's ahead for 2021? We'll ask Jim Rossman, Lazard, head of shareholder advisory. The deep freeze that has forced the shutdown of U.S. refineries, oil wells, and meat plants is still leaving more than 3 million customers without electricity in the U.S. It may keep parts of Texas in the dark for several days. We'll give you the latest. And the Bitcoin boom continues. We'll talk to Anthony Trenchef, the co-founder of Nexo, one of the largest crypto lenders. He predicted 50,000 for Bitcoin last January when it was only trading for $7,000. We'll see where he thinks it's headed next. Right now, I want to take a quick look at what's going on in the markets. A little bit of a pullback, a little bit of a pause in terms of the rally. Remember, yesterday we were saying the longest winning streak that we'd seen for global stocks in 17 years. Well, that's come to an end, and we see equity indexes around the world pulling back a little bit. Here's the S&P 500 at the top of your screen. You can see it down about 15 points to 3917. So now we are about 82 points away from 4,000. S&P 500 retailing index up almost 1% after a huge surprise on retail spending. It turns out Americans who got $600 checks went out and spent them as quickly as possible, and it'll be interesting to see if they do the same with $1,400 remainders. New York crude oil trading higher right now to $60.62. Brent trading over $64 a barrel. And there at the bottom of the screen, you see Bitcoin up another 6% today, $51,390. Now, hedge funds' fourth quarter holdings disclosures, the so-called 13F filings, arrived overnight. Bloomberg's Shonali Basak has been sifting through them. Shonali, what did we learn?
So the big thing here is hedge funds were hot again on technology. Matt, a lot of that was because pure market value, big tech names. Microsoft was a big one that was beloved by the Tiger Cubs that we love to watch so much. Those are the proteges of Julian Robertson. We also saw some selling out of some old school popular tech names through this crisis. So Zoom, a lot of people selling out of, Palantir. But I've got to say, hedge funds, yes, we're buying into technology, but a different class of investor, a more conservative type of investor, the pension funds, largely selling out of big technology names. And, today we have Jim Rossman with us, the head of shareholder advisory at Lazard. Thank you for joining us. That used to mean activism defense advisory, but now I know you're looking at a much broader set of shareholders. Jim, what are you looking at in these set of 13Fs?
That's right, Shonali, and thanks for having me on. We look at over 65 13Fs in a very specific group of investors. We focus on those traditional activist shareholders. We also look at occasional activists, and we look at sort of what we view as sort of market-leading smart hedge funds and to see where they're putting their money to work. We did see the technology buying. We're also seeing buying in consumer and healthcare and real estate. Why? A lot of those sectors are sort of sifting through winners and losers from the COVID crisis. And I think in 2021, we're going to see a lot of focus on who got it right, who wasted a crisis. And there's a lot of deferred decisions, frankly, too, around operations, capital allocation, when are dividends coming back, share repurchase plans, and frankly, business portfolios. There were a lot of decisions deferred on whether to separate certain assets that are no longer core.
Absolutely, Jim. You know, we see this globally, and of course, countries in a lot of other countries have received even more support. Companies in a lot of other countries have received even more support than those in the U.S. The problem of zombies is a real one here. Why do you think the U.S. is the center of activity for activists?
The opportunities in the U.S. are just significant. We're still undergoing massive transformation because of the impacts of COVID. U.S. companies have deep supply chains abroad, globally. They've also, in many cases, diversified their portfolios to take advantage of globalism. What we're seeing now is a potential reversal of a lot of those strategies. Technology has accelerated the development of new technology, as we say, Zoom, WebEx, what we're doing right now, the work at home culture has accelerated trends. So U.S. companies right now that were heavily invested in certain areas of the economy, certain supply chains, geographies, are now recalibrating that. And activists, as usual, are out on the front foot looking at opportunities. And the other new thing we're seeing coming is the rise of ESG, which, Matt, as you know from Berlin, it's been a popular topic in Europe for many years. ESG is now firmly planted on U.S. soil. The attack on Exxon in December by engine number 1, followed up by D.E. Shaw, Value Act, CalSTRS, Church of England. Who knows who's going to come next for that situation? ESG themes are now on American shores, and in 2021, we're going to see more campaigns focused on who's doing ESG well and who's doing poorly in that area. And there's not a lot of clarity, frankly. Who's to referee all this?
That's a great point here, and what's happening at Exxon is a perfect example of this. I mean, what is the next shoe to drop in ESG? Is this more oil companies getting agitated by activist investors, or are we going to see it with somebody who just doesn't have enough people of color or women on their boards, getting at the social aspect of this?
I think you're absolutely right, Shanali. We're going to see some attacks that focus on the S in that ES and G, other ones that focus on the board, the G, and also the environment. But I'm looking for oil and gas, transport, heavy industry, steel, chemicals. I think those are all the areas. And it may be that just a standalone attack on strategy combined with an E or an S theme, or it just could be an S theme on its own. It's certainly very popular with investors, and the asset managers have all, I don't know if you're watching the statistics from last year, but there's twice as much capital now dedicated to ESG themes or funds that have an ESG filter on their investment strategy. And as I said, there's no umpire right now. There's no referee determining, who really is focused on ESG or who's doing it for fundraising purposes. But what our public companies know is they're in the crosshairs, and they're all spending a lot of time. Our clients are spending a lot of time trying to understand ESG right now.
I want to ask what you think about the hunt for yield, investors being pushed so far out the risk spectrum that they're now willing to just hand seemingly anyone hundreds of millions of dollars for blank check SPACs. Is that a concern to you, or does it offer opportunity for activists?
Well, I think it's an opportunity for activists in two ways. Number one is there is a ton of capital looking at this opportunity right now, which means activists can raise their own SPAC funds. Will they become SPACtivists with those funds? We don't know, but it provides them with a new source of capital, which frees up other capital for more traditional activist techniques. But there are now hundreds of SPACs, hundreds of billions of dollars. This is a major disruption of the IPO market. We're going to see a whole new generation of companies coming public. Will they be ready? Won't they be ready? We don't know. But those companies are, if they fail, are all opportunities for activists. So I can tell you, activists are watching the SPAC market very closely. There were 28 SPACs filed alone last Friday. That was more than one per hour.
So that's really interesting because, you know, presumably this all means more money into activist hedge funds this year.
I think 2021 is going to be a banner year for activists. They were smart last year. Many of them hedged well as the COVID crisis increased. They pursued other strategies. They took their time. They paused, and then when the market came back in the fourth quarter, they've redeployed capital. There's if you think about it, going public, how assets move either from private hands, venture capital hands, or assets that are sitting inside of public companies, carve-outs, go public. Activists are going to be there waiting to take advantage of it because they realize there's a lot of inefficiency. This is not an institutionalized market yet. These are very early days. A lot of the companies that are going to go public through SPACs have not been vetted through the traditional process, and activists are going to be studying the market closely. You know, just a year ago we talked about the lack of companies wanting to go public. It feels like that trend's in the middle of a major reversal right now.
Jim, thank you so much for joining us. I'm really glad we got to spend some time with you. Jim Rossman there of Lazard, and Shanali, I got to thank you as well. Shanali Basak brought Jim to the program, and I think he was an excellent guest. I hope we can get him back in the future. Coming up, junk traders are shifting from old habits. The bond market has lagged adoption of electronic trading trends, but the tide may be turning. We'll discuss that with Market Access President Chris Concannon next. This is Bloomberg.
Nuestro país, igual que los demás países del mundo, no están preparados para esta pandemia. Más aún, los más afectados son los países de desarrollo como el nuestro, ¿no?
This is Bloomberg Markets. I'm Matt Miller. We're going to talk right now about electronic trading taking off in the junk bond market, where close-knit relationships have long been the key way of doing business. Market Access saw high-yield trading jump more than 50% last month from a year earlier to a record $1.9 billion in average daily volume. Market Access President and COO Chris Concannon joins us now to talk about this. I want to say revolution. That's the, I guess, sensationalist in me, Chris. It's at the very least an evolution. What do you think you're seeing in this industry?
Well, thanks, Matt, for having me. It's great to be on the show. And you're right, it is an evolution. It's a multi-year change in the market dynamics. And obviously, market access is at the center of that change in electronic trading. In 2020, we saw 17% market share of the high yield market, also known as the junk bond market. We continue to see high levels of electronic trading adoption across the entire fixed income market, both here in the U.S. but also globally.
So I don't know, is junk bond a term people don't like to use in that market? It doesn't even have a pejorative feel for me, since I've been saying that for so long. Is it a different market now, you think, since the COVID pandemic, during the lockdowns, and as they start to ease?
It is slightly different than during the crisis of the pandemic, call it March 2020, where we saw high levels of trading activity. But many of the large banks were challenged, particularly in the high yield market, and they were protecting their balance sheets. So the ability to provide liquidity was certainly degraded during that time. Obviously, on our platform, we run an all-to-all market where all market participants can provide liquidity to the other market participants. And we saw a huge jump in our market share as a result of that all-to-all market. And if you really think about it, you know, the U.S. equities and the futures markets that we enjoy have all-to-all market solutions. And traditionally, the bond market was really a dealer-to-client market solution. And it's our all-to-all market that has been growing market share, particularly in the high-yield market, where we're close to 50% of our volume is an all-to-all anonymous electronic solution.
So, Chris, this used to be a market where, you know, I would go to my dad's squash club and meet somebody at the bar. He knows a guy who's doing a deal. I know somebody with funding. It's not like that anymore, right? Do you think the market benefits? Do you think spreads tighten as a result of the electronic all-to-all access?
Absolutely. I mean, the savings that our platform created for clients was record savings in 2020. We actually saved our institutional clients $1.1 billion on our platform as a result of largely that all-to-all electronic solution. Just to put that in perspective, our company only earned $687 million in 2020. So it's very few companies on the planet can say they saved more money for their clients than they actually charged them.
Do you think the pickup, the incredible pickup in volume, is a pandemic blip, or is this a change that's here to stay? Is it sticky, Chris?
I think it's very sticky. What we've seen in other markets that went through that evolutionary change to electronic trading is there typically comes with it a higher velocity in the market. As you narrow spreads and use electronic trading, trading participants can trade more. There are trades that other participants refuse to do in wider spreads, and now they can actually use trading strategies that didn't exist in the market before. So we see higher velocity in the market, higher turnover whenever you see a growth in the adoption of electronic trading. And I should add, the growth of the ETF market for fixed income products in ETFs is also driving the electronic adoption of the underlying corporate bond market. So that growth in ETFs, fixed income ETFs, is also participating in the evolution of our markets.
All right, Chris, I think it's a really fascinating change and an important one to the industry, so I'm glad we got a chance to talk to you. Chris Concannon there, Market Access President and COO, talking to us about the big shift to electronic trading. And we should also note that, of course, Bloomberg LP, the parent of Bloomberg News, competes with Market Access to offer fixed income trading, data, and information to the financial services industry. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to Bloomberg Markets. I'm Matt Miller. Earlier today, Ford announced it will drastically overhaul its business here in Europe, where it didn't sell a single fully electric vehicle last year. It is now vowed to go completely electric by the end of the decade. Francine Lacroix and I caught up with Ford's Europe president, Stuart Rowley, and asked him about hitting this EV goal.
From 2026, all of our passenger vehicles will be zero emission capable, and by 2030, we will sell only battery electric passenger vehicles in Europe, investing $1 billion here in our Cologne assembly plant to transform it to our own electrification center. And this is where we'll build our first volume battery electric passenger vehicle in Europe from 2023.
All right, we're looking at pictures of the Mach-E rolling down the highway. I'm going to guess that is in California, where you've got a testing center. Stuart, you know, lately we've been seeing the Ford family work more and more with the Porsche Piche people, and you are going to use the Volkswagen platform in this new plant as well. Are you able to cut costs substantially by partnering up with VW?
Well, Matt, we're really pleased with our emerging alliance with Volkswagen. As you point out, we will use the Volkswagen MEV platform for our first domestically produced battery electric vehicle here in Europe. We, of course, have our own Ford electrified platforms. You showed them great Mustang Mach-E built off the Ford platform there. And, of course, we are also partnering with Volkswagen on commercial vehicles where we will lead with Ford platform. So it allows us to get scale, especially in these earlier days of electrification. As you know, scale is really important as we make these vehicles affordable and accessible to our customers. So we're really pleased with the progress of that alliance.
But Stuart, good morning from London. It's no secret Apple is also actively working on a car, a driverless car, probably electric as well. Can you really compete with Apple?
Well, absolutely. Of course, Apple doesn't produce any cars today. We produce many. And of course, we recently announced that we were partnering with Google. You know, the digital experience is going to be more and more important as we move forward as cars electrify. And having a partner like Google will really allow us to differentiate.
And And that was our exclusive interview with Stuart Rowley, Ford Europe president. The interesting thing is Franny wants a self-driving electric car. I want to pilot my own naturally aspirated engine with big inches. And I am actually getting lucky, although you'd think the industry is going the other way. On February 3rd, Ford introduced its new F-150 Raptor. It's a huge pickup truck with extra stiff suspension for going over big bumps in the Baja. It's got a turbo-powered 3.5-liter V6, but it needs to go up against the Ram TRX, which has a supercharged 6.2-liter V8. And the best thing that's coming out now is a Jeep Wrangler with a naturally aspirated 6.4-liter V8. So if you like big inches and you want your engines just naturally blown with air, you are in luck. It's not all over. Coming up, we're going to explore how the warming Arctic helped to drive the deep freeze that's moving over Texas. This is Bloomberg.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I'm Mark Crumpton with Bloomberg's First Word News. President Biden's first speech to a joint session of Congress probably won't happen until March. That would make it the latest debut presidential speech to lawmakers in decades. Administration officials don't expect President Biden to lay out his long-term economic plan until after the coronavirus relief package passes. The United States and Japan reportedly have agreed to extend their agreement on troop funding for a year. According to the Asahi newspaper, the deal will keep Japan's share of the cost of hosting U.S. forces at about $1.9 billion a year. Former President Trump had demanded a fourfold increase in financial support. The UK is holding back its plan for evaluating the economic impact of new trade deals. It was prepared before Prime Minister Boris Johnson signed the post-Brexit agreement with the European Union. The UK has said it won't publish an impact assessment of the deal with the EU, even though it's done similar assessments for other major agreements. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Hi, I'm Amanda Lang. Welcome to Bloomberg Markets.
And I'm Matt Miller. We are excited to bring you our Bloomberg and BNN Bloomberg audiences, the top stories that we're following from around the world, kicking it off with the role of climate change in the U.S. power crisis. Millions remain without electricity, and the situation seems to be getting worse. We'll have more in this week's Bloomberg Green segment. And staying green, we're going to speak to the CEO of Ire Wellness about the cannabis company's growth in the U.S. and the recent Reddit-fueled retail frenzy in the pot sector. Plus the cryptocurrency, speaking of frenzy, fever continues. Bitcoin's price tops $51,000. We'll speak with Anthony Trenchhead, the co-founder of the largest crypto lender, next. Amanda?
And Matt, we are seeing a little bit of a sell-off. It's modest across markets, and it's not broad-based. We do have the subgroups of the S&P 500 not in lockstep. A couple of groups moving higher. Energy remains one that is showing some strength here, as does communications. When you look at the growth, the leadership stock got this market here today, you can see a mixed picture. Apple down, Amazon up. So a little bit of discrimination going on in the buying in terms of what's propelling investors here. Look at Shopify at the bottom of your screen. Of course, from time to time, the most valuable company in Canada, being our biggest bank, reporting earnings that were certainly looking on every metric, but warning that next year may not be as strong as this year, perhaps obvious, but you can see a sell-off there. We're still watching the price of West Texas move ever higher as we see that cold snap across Texas continue to cripple the grid, continue to create blackouts and shut in some supply there. It is, of course, leaving many Texans still in the dark. And of course, one of the concerns is the extent to which this sort of extreme weather is likely to be with us in one form or another. And in fact, while we don't link weather with climate change, we do know that longer-term changes in the climate can have an effect on the weather. We've got with us Bloomberg Green's Jillian Goodman. Jillian, thanks for being with us. And let's just start with the link here. I know that Americans love to say it's an Arctic storm from Canada. One, though, really from the Arctic Circle, and you can argue that there are extreme weather patterns coming because of climate change.
Yes, that's exactly right. Sorry to say that this one, it did indeed come down from the north. We saw what's called a sudden stratospheric warming event that caused a weakening of the polar vortex that in turn, basically the polar vortex keeps the cold in the north. And so what happens when that weakens is cold air spills south. And as you say, we can't attribute this particular event to climate change. Attribution science is still a rather young field. It's advancing really rapidly, but we can say that these kinds of events have been happening more frequently and as the world has been warming. And more generally, climate is very interconnected, and temperatures change around the world, and particularly in the Arctic, which is warming twice as fast as the rest of the world, everything else is affected. Everything else gets more volatile.
Exactly what happened in the Dennis Quaid, Jake Gyllenhaal film, The Day After Tomorrow. They predicted in 2004 to some extent, Jillian. The interesting thing is we're hearing now from a lot of Texans that green energy is somehow to blame for this. How did that narrative get kicked off?
We see that a lot in broad-based energy. The same thing happened during the fires in California last summer. And, I can't say for sure, but we can say that this is a pattern. And, the thing in Texas is that it wasn't just wind turbines, like gas plants failed, oil rigs failed due to a broad failure to protect against occurrences such as this. And this one in particular, this sudden stratospheric warming event, this happened, so there was lots of time. This was very, very, very predictable.
All right, Jillian, great to have you on, if only briefly. Jillian Goodman from Bloomberg Green to talk to us about the latest on what we know about Texas, what caused it, and what's happening there. We're going to dig into the Bitcoin boom coming up with Anthony Trenchev, the of Nexo. It's the largest crypto lender in the world, and I spoke with this guy over a year ago. When Bitcoin was trading for just $7,000, Anthony told me it's going to hit 50 grand by the end of the year. A lot of people thought he was insane. Now, a lot of people are going to want to listen. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of the pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear, they wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of a little bit before it became such a hot method of going public.
This is Bloomberg Markets. I'm Amanda Lang alongside Matt Miller, and it was who conducted an interview about a year ago, a little more than a year ago, with a guest that said Bitcoin was going to 50,000, Matt, and at the time that seemed bonkers, even though it was already at 7, and that seemed bonkers to some. Now, of course, Bitcoin has surpassed that level, so the definitely in a dwindling camp, I guess we have to say, when it comes to Bitcoin and its value.
Yeah, but they remain, I say, Amanda, I started covering Bitcoin over 10 years ago, and people thought $1,000 was just a nuts. When it did hit 1,000, I went for 2 weeks living on only Bitcoin. I didn't spend dollars for 2 weeks, and it worked out pretty well, but it came off that price. Everyone said, oh, that was a bubble. Then it went to 20,000 in 2017, and people thought the world has just lost its senses, came back down, and that's around 7 grand, it would hit 50,000. Now it has. Let's bring him on. Anthony Trenchev, co-founder and managing partner of Nexo. You now have, Anthony, $5 billion of assets under management. You have a big Bitcoin lending business. And the interesting thing is, you have to admit this is at least a rubber bubble, right? There is a lot of volatility and has been historically in Bitcoin. Isn't it difficult to run a business with that kind of volatility?
Well, not in the past year at the very least, but kidding aside, it is the best performing asset on any significant timeline, whether it's 1 year or 5 year or 10 years, is the best performing asset. So it is a matter of having the right perspective when investing in Bitcoin, and that's how we build out our business very conservatively. We lend only a loan to value ratio of 50%, precisely because of its volatility. And we structured the business that thrives in both bull and bear markets.
I'm going to keep myself in the doubters camp, just to out myself to both of you and the world here. My concern with Bitcoin is it's impossible to know how to value it other than what the next guy is willing to pay for it, which always gives you pause. Now, the counter argument often offered up, Anthony, is that's the same as gold. The JP Morgan call on Bitcoin,
or the dollar.
146,000. Or the dollar, I guess. Well, let's not go there. That JP Morgan call, though, was predicated on the idea that Bitcoin would trade like gold. Do you think it's still going to go there, that it'll be treated the same way that gold is treated?
I think that actually Bitcoin is a better version of gold because it has the necessary characteristics, you know, scarcity, a fixed finite amount. With Elon Musk taking us to Mars, apparently there's a bunch of gold there, so we might see some, you know, inflationary pressures on gold. But I do think that Bitcoin is actually a better version because next time you travel to Europe, try bringing $1 million in gold versus the same amount in Bitcoin. It's much better in so many ways. So I think we're going to see outflows from gold into crypto, and it is a totally new asset class, like never something like we've never seen before, and it's here to stay.
And Anthony, I'm going to push back a little bit against that because, you know, I was thinking the other day when this Arctic frost came down from the Great Concavity and shut down Texas, you'd rather have gold in that kind of situation than Bitcoin, right? I mean, especially if the cell phone network goes down, you're not going to be able to buy anything with your ones and zeros, unless, of course, you just remembered them off the top of your head. Isn't there a situation, isn't there an argument to be made for gold when it really comes, when push really comes to shove, when you have to grab your bug out bag?
Well, I am a gold bug, have been for the better part of the past decade, but you got to consider the counter argument, and it is that if you invested $1 in gold a year ago, you have about $1.70. If you invested $1 in Bitcoin 10 years ago, you have around $25 million right now.
I guess the other side of this argument, and I know where Matt's going with that, it's not just gold you want to own in that scenario, it's gold coins, so you can actually go buy things with them. That's called the end of the world trade. It only works once. In terms of the cryptocurrencies, here's my real question for you is, why do we need digital currencies other than the digital currencies that we have? I haven't touched a paper dollar bill or $5 bill and I don't know how long. Everything I do is digital. It just happens to be the one that my central bank manages and my bank manages for me. What's the purpose of a cryptocurrency other than for use, as our central bank said in Canada recently, on the dark web for fraudulent activity, all of the reasons we know people like it?
Well, first of all, the number one choice for money launderers in the criminal syndicate is the dollar. So there's no beating around the bush around that fact. But more importantly, we need crypto, and in particular Bitcoin, because there are 3,000 other cryptocurrencies which we're not super excited about. But what sets apart Bitcoin is the fact that precisely your central bank cannot print it at will. And this is something that we've seen being done on a massive scale last year. I think close to $8 trillion have been printed. And you can feel the creeping inflation. It's palpable everywhere. I was in London some time ago, and I paid for the exact same meal that I paid as a student 10 years ago, twice the pound value. So it's obvious in this inflationary macro pump money printing environment that people will be searching for alternatives. And Bitcoin is our generation's gold. And it's obviously that we millennials, the next generation to be the main driver of the economic cycle, are taking such an interest in Bitcoin in particular.
I say it's a good point on the dollar, right? More hitmen, drug dealers, evil dictators have been paid in dollars than any other currency. The inflation argument, though, I wonder if that can come and bite you back, Anthony. I mean, if we start to see it, retail spending was off the hook today. If we start to see the Fed get worried and go the other direction, does that mean Bitcoin, does the air get let out? Do we all of a sudden see it drop down to 30,000, 20,000, 15?
We could very well see a correction of 50%, and that wouldn't have an effect on the long-term bull market of Bitcoin. Like 30,000, that was a month ago, and now it will have to crash almost in half to get there. About Bitcoin, it's really taking the right time horizon. You have to have some because of its potential and the way it has performed historically. But also caution is advised at these levels where the total market cap of Bitcoin is above $1 trillion. You don't put your kids' funds, college funds all at once in Bitcoin because there are some inherent dangers. So right now, I'm not super excited about particular price levels. Like last time when I told you 50,000, I am watching right now the feeling, the market that it's giving me, how it's reacting. It's at 75,000, which would be the next logical stops. What's the leverage and the credit in the system? And what's the overall exuberance of the market participants? And this will tell us where Bitcoin is going next.
When you made that $50,000 call, you said by the end of the year. What's your time frame on 75,000, Anthony?
I haven't brought my crypto crystal ball today. I think that we are accelerating towards 75,000 right now, and it's really going to be a question of how it reacts there. Ultimately, I think we're going to go much, much higher. 100K is very realistic in the next 12 to 18 months, but it is not going to be as smooth as a ride as my last year's prediction, simply because of the fact that a lot of people were calling it right now. And last time we talked about it, it was just me and Matt who, were even considering such scenarios. And the markets never do what everyone is expecting them. So caution again.
All right, Andy, we'll get our 100,000 hats ready. Amanda, we'll get you one too, even if you're a doubter.
Absolutely.
Maybe it'll be 100,000 Canadian dollars. Anthony Trenchev, great to have you with us. Appreciate it. Anthony Trenchev, CEO of Nexo. One other space that has seen plenty of speculative interest lately has been the cannabis group. Coming up, we're talking to the CEO of Air Wellness about this recent Reddit-fueled frenzy in pot stocks. This is Bloomberg.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to Bloomberg Markets. I'm Amanda Lang with Matt Miller. And if you've been watching across all the speculative trading driven by social networks like Reddit, you have noticed that pot stocks appear to be, Matt, the latest target. If you've been watching pot stocks longer, though, you would also know that they do travel up and down in double-digit percentage moves. This is a super volatile group. Here's the options on some big names. And you do need a Teflon stomach to manage the ride.
Yeah, absolutely. I mean, they soared at first with so much enthusiasm that everybody wanted to go out and buy joints and would be able to legally smoke them. Then they came back down. I guess people thought valuations had got ahead of themselves, or that the passing federal law wasn't on its way anytime soon. Of course, you've got it there in Canada, but America's maybe a little bit more conservative, and it doesn't look like it's ever coming in Europe.
Well, right. And how long before there's federal regulation in America? We want to welcome John Sandelman, CEO of Air Wellness. And John, let's just start right there with just the overall picture of the regulatory environment, which is surely one of the big headaches of managing a pot company, because you've got the different treatments of medicinal versus recreational and state-to-state differences. Do you think you'll get a kind of a coherent lens on this in America anytime soon?
So while I don't necessarily think we'll get a coherent, comprehensive piece of legislation which will take a business that's state legal but federally illegal and get perfect 2020 clarity on that. I'm not a believer of that. I think we'll get aspects of a bill that will make it easier for the industry to be able to bank itself and finance itself, and also attract a whole host of investors that have been previously precluded from buying into this fast-paced, fast-growing CPG business, which will be welcome by the existing investors and the cannabis companies as a whole.
So what are you focused on, John, at Air? Because I guess there is, of course, the medical need for marijuana. If you look at it narrowly, it's not as big as the recreational market, which, you know, a lot of my friends who are recreational users have a medical card, but they don't really medically need it. They just want to get high. How big is the market, and how fast is it growing right now?
The medical or the adult use, or the overall market?
The overall market. How big is the overall market now? And, you know, a friend of mine the other day was shopping at a supermarket in Denver. On the back of the receipt, he had a coupon for a pre-rolled joint. So it seems like acceptance is insane in some places, whereas you just don't see it filtering through in other cities.
So let's start with, I thought, your original questions. The reason why I'm a previous hedge fund manager. I run my family office. I started focusing on cannabis 3.5 years ago. And one of the reasons that I found it so attractive, there are a few products that both, as we say at Air, we're at the cross-section of wellness and wonder. We do believe that cannabis is nature's medicine. And we do believe that people like to use cannabis recreationally. And we do believe that there are very few consumer products out there that appeal to both senses, right? Both needs. And that's what made it such an exciting investment. And so in the short term, it was medical, right? Previously, it was all focused on medical. Then the focus became adult use and recreational. And yet, I think over the longer term, once this is federally legal, I could see the medical being larger than the recreational. But that'll come with federal legalization and broad acceptance.
We don't have a ton of time here, but I want to ask you about the volatility we've seen. And there is this sense that the retail investor base may be, taking even new interest in the cannabis stocks. Your stock hasn't been super volatile, I'll say that. But do you think that volatility is unwelcome for the whole space?
Well, I think volatile stocks make investors nervous and make retail investors nervous. And what we saw is what you all said in the beginning. There was, in the beginning, as I call it, Cannabis 1.0, this momentum trade, this very enthusiastic trade. We've seen markets like that. We see markets correct. Now we're in Cannabis 2.0. I think there's a different group of investors, more hedge funds, more family office, more longer-term players. I think with the SAFE Bank Act, which I believe will pass this year, we'll see U.S. institutions for the first time enter the marketplace, and we'll see more stability in the share prices. But I do believe with the entrance, the wall of money will enter the market.
John, fascinating stuff. Clearly, we have to go deeper and get into this. I hope we can get you into the office soon. John Sandelman there of Air Wellness. From Amanda and myself, this.
These solar arrays that we're going to install are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
Let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm Mark Crumpton with Bloomberg's First Word News. United Nations Secretary General Antonio Guterres today criticized the global distribution of COVID-19 vaccines. The UN chief told a high-level meeting of the Security Council that 130 countries have not received a single dose of vaccine, and he declared that, quote, at this critical moment, vaccine equity is the biggest moral test before the global community.
The rollout
of COVID-19 vaccines is generating hope. But at this critical moment, vaccine equity is the biggest moral test before the global community. We must ensure that everybody, everywhere, can be vaccinated as soon as possible.
Secretary General Guterres called for an urgent global vaccination plan to bring together those with the power to ensure fair vaccine distribution, scientists, vaccine producers, and those who can fund the effort. He added that 10 countries have administered 75% of all vaccinations. President Biden says he invoked a federal law to speed up production of the coronavirus vaccine. The president told a CNN town hall meeting that Moderna and Pfizer agreed to sell more doses of the vaccine to the U.S. faster than planned. Last week, the government announced there would be enough doses by the end of July to inoculate all American adults. Utility operators struggling with that deep freeze in Texas have a warning. Those rolling blackouts could keep parts of the state in darkness for days. The power cuts were implemented for a second day in a row to prevent the collapse of electric networks. Outages spread last night to more states, including Arkansas, Louisiana, and Mississippi. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
And we're going to bring in Kathleen Hayes. She is Global Economics and Policy Editor at Bloomberg News, live from our New York City bureau. And Dave Wilson, stock editor at Bloomberg News on the remote access from New Jersey. Kathleen, I just went to the Fed website, open up the text. Anything jumping out for you? One headline we're seeing is that that FOMC meeting minutes showing that it's likely to take time before, quote, substantial progress. So there's one little kind of vague headline.
Yeah, substantial progress. Well, look, it would be a gigantic surprise to have any surprises in here, because at the press conference after the last Fed meeting, which you just referenced, Carol, when Jay Powell spoke to the Economic Club of New York last week, in every single way, the Fed has made it clear it is not time to start looking at any change in policy. Interest rates, do those even exist anymore? Forget those. But bond purchases, for example, the Fed is just fine keeping lots of stimulus in place as long or longer than it is needed until substantial further progress is made. What is that? Well, that's full employment, maximum employment gets reached, and you get inflation at 2% or above and staying there. There's not. We got those great retail sales numbers today. That I think that has a lot more to do in terms of questions or how it will provoke a response is in Congress with the stimulus package, right? We got strong industrial production. But for the Fed, I think we're going to be looking more for signals about what the Fed is looking next to guide what they do.
Well, following along on the live blog here, our colleague Chris Yancey writes, quote, there's a suggestion here that it will be, quote, some time before the Fed scales back its asset purchases. Quote, participants judged that it was likely to take some time for substantial further progress to be achieved. The further progress referring to progress toward the inflation and employment goals. What do you make of it, Kathleen?
Just what we expected, right? I mean, it's boilerplate right now. It's their mantra. It's their program. And for example, Eric Rosengren, who is president of the Boston Fed, spoke today, kind of underscoring this. He says he wouldn't be surprised if we sustain inflation at 2% in the next year or two with labor markets as disrupted as they have been, right? But that's a long ways down the road, and he thinks there's a lot more risk to get labor scarring, people who can't work at their jobs as retail workers, as waiters and waitresses, and they will be permanently scarred in their jobs. So that's another reason why the Fed thinks they have to do everything they can to keep the stimulus there for now.
Yeah, and the Fed reiterating that policymakers will be quite clear in signaling when they are preparing to change the pace of asset purchases, which is something we have heard from the Fed. We know that they're not going to be like, surprise, we're going to change things.
And it's one more thing I want to throw in quick before we get to Dave. I think that's so important, though. What Jay Powell is trying to tell everybody is, I'm not going to create a taper tantrum, you guys. You're going to get all kinds of signals way in advance advance. It's not going to be a little slip of the tongue or something to let you know that we're getting ready. On the other hand, some people say the Fed's tapering, right, already. I mean, the bond market is because yields are rising, and of course that's having an influence on stocks.
But remember, when the Fed could surprise us, that's when you really move markets. Let's talk about markets right now. That 10-year note with a yield of 129, 5-year yielding 0.55, 2-year note, that shorter end of the yield curve, 0.10. Dave Wilson, talk to us, though, about the equity trade. Any kind of reaction? Looks like we took a little bit of a leg up from the, at least on the S&P and the Dow.
Yeah, a little bit. I mean, not enough to get back to even for the day in the case of the S&P 500, but you did see a little bit of a move, which may be, as much as anything, the idea that, steady as she goes is kind of, the takeaway from what the Fed had to say. So, when you kind of step back from it, you look at what's going on today. I mean, you see that, some of the chip makers aren't doing so well. Technology, the worst performer among the 11 main industry groups in the S&P 500. Energy, best performer, but not even up 1% if you look at their industry gauge. And the financial stocks, you talk about an area that's certainly done well lately as we've seen bond yields move up. I mean, basically a little change, so sort of a wash in terms of what the policymakers had to say.
Okay, don't get mad at me, Dave, but I got to ask about Bitcoin because another day, another record.
Oh, look, it is. It's right here in the minutes.
It is, of course. Yeah,
or maybe it is. I don't know.
Well,
I
got to tell
it.
you, though, we had Mike Regan on. He had a new piece out today talking all about how, like it or not, Bitcoin is here to stay. It's not one of those things that doubters can ignore anymore. Dave, what do you make of it?
Well, I mean, it's consistent with sort of people's willingness to take increasing amounts of risk. We see it in cryptocurrencies. We see it in the shares of smaller companies. We see it in riskier bonds. And I'll talk about that more next hour with my chart of the day and how that's sort of influencing relative value between markets. So, you put it all together. It's certainly out there. It's something to pay attention to. In terms of today, though, you look at some of the Bitcoin-related stocks and, maybe not a whole lot of direction. Tesla, which put $1.5 billion into the cryptocurrency, down a bit more than 1%. MicroStrategy, which made an even bigger bet relative to the size of the company, lower for a second day, down 2.3% at the moment.
Kathleen, any last words on this? I'm looking through the minutes, and I was going to where they talk about the virus. They certainly note that.
Well, I guess what's maybe all we can say so far, because any of us certainly haven't had the chance to read all 16 or 17 pages of it, is that what the Fed has communicated to us so far is what you get. Sometimes in the minutes you get, oh, look at that. There were a few members who were disputing this or that. We may get that in the end. But I'm glad you mentioned the virus, Carol, because I think the Fed continues to believe, as many people do, that the virus and now the vaccines have the key to the economy. And if for some reason we get more retail sales-like reports, right, where suddenly things, because people can get out and shop more, they don't have to save that stimulus check they got or whatever, right? And the economy really starts picking up quickly. That's when the Fed, I think, is going to start telling us that maybe they're looking at things. But for right now, it's already February. It'll be very surprising if they're ready to do anything before the end of the year.
Well, and I think, we were on this when we covered Jay Powell at the New York Economic Club.
Yeah, just a week ago.
Yeah.
Amen.
Yeah, he really laid it out there. All right, Kathleen Hayes, thank you so much of Bloomberg News. And, of course, Dave Wilson. He'll be back a little bit later on with his chart and stock of the day. Let's go right to the Bloomberg Business Week Bite of the Day. One number that tells us a lot, today's number, 50.
Over 50% of Israelis over the age of 30 have received the first dose of their COVID-19 inoculation, the nation's health ministry announced on Wednesday. Israel has now inoculated almost 4.1 million people. That's roughly 44% of the entire population. Of the overall figure, nearly 2.7 million people, it's about 29% of the population, received the second dose of the vaccination.
We're going to talk about that a little bit later on, too, because that has certainly been one area of the world that has been put out as kind of a case study. Denmark is another one, but it's not necessarily a straight path forward.
No, and it's also not, apples to apples comparison with Israel and other countries. And they'll be the first to say, hey, we're in a unique position.
Exactly. So we're going to get to that. We've also got the most read story on the Bloomberg. It reads like a Netflix series. We've also got those power outages, the Black Swan event that happened in Texas. We'll get to that in just a moment. First up, though, to your world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Conservative radio talk show host Rush Limbaugh has died at the age of 70. His wife, Catherine Rogers, broke the news on his radio show today.
It is with profound sadness I must share with you directly that our beloved Rush, my wonderful husband, passed away this morning due to complications from lung cancer.
Limbaugh had announced he had lung cancer a little more than a year ago. Well, much of the nation is still in a deep freeze with a little snow scattered in for good measure. More than 100 million people live in areas covered by some type of winter weather warning, watch, or advisory as the next winter storm hits the eastern and central U.S. Icing is expected from East Texas to Alabama. Well, state health officials in Georgia say the snow and icy weather has significantly delayed shipments of the COVID-19 vaccines to the state, forcing hundreds to have to reschedule their appointments. Well, the pandemic has added more work for the IRS. Bloomberg's Ann Cates reports the agency is swamped as the tax filing season gets underway.
IRS phones are ringing off the hook even more than usual. But according to Politico, odds are slim, about 11 to 1, that anyone will answer. The problem is that the IRS is being bombarded with nonstop questions about last year's tax returns, tax refunds, coronavirus relief payments, tax credits, and more. The IRS received 7.5 million more calls last month than in January 2020. In Washington, Ann Cates, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. So let's go through some of the stories that we're seeing in terms of COVID. What did you guys talk about on Quick Take today, besides when it comes to the virus?
Well, with the virus, we focused on the updates to the vaccine tracker that we've had here at Bloomberg. And we talked a lot about the unequal distribution of vaccine. It's been a big story in New York City. And I was trying to really think about, is this a big story in New York City because I'm in New York City, or is it because it's New York City and it's a big city? But it turns out that inequitable vaccine distribution is a problem everywhere in the United States, and that there still needs to be a lot done in order to make sure that everybody's getting access to it.
Yeah, I think it's an important issue, and I know in some of the tracking and the reporting that we've done that it's hard to kind of get a lot of data about it, but we are definitely seeing, and maybe some of it has to do with access, and these are things that certainly need to be tackled. Meantime, we do have New York saying that summer camps can reopen. You've got the European Commission securing hundreds of millions of additional doses, vowing to speed the clearance of vaccines. And we do also have New York Mayor Bill de Blasio calling for an investigation into Andrew Cuomo, the governor of New York, about those nursing home deaths in the state.
Yeah, de Blasio saying, quote, "We need the full truth," he said in a wide-ranging conversation with former Deputy Mayor Howard Wolfson that was published by Bloomberg Opinion today. It's time for the state of emergency powers to be curtailed and to restore control to localities. Cuomo has come under a lot of criticism, especially for the way that he has dealt with the number of deaths here in New York and classified them, but also further highlights the rift between the New York City mayor and the governor of the state.
Yeah, exactly. And listen, time will hopefully tell about what was going on, and I think we've been learning as we go along. I think this whole process has been, safe to say, a difficult one at least, and so we'll see how this all plays out. We're going to talk though a little bit more about how it's starting to feel though with some of the numbers that things are getting better, but there's a lot of things that have to fall into place for that to continue.
Yeah, the question is, are we out of the woods yet?
Exactly. You're listening to Bloomberg Radio.
In case you missed it, our latest Business Week podcast features Judy Samuelson, Vice President of the Aspen Institute, on her book, 6 New Rules of Business, Creating Real Value in a Changing World. Download it now at Bloomberg.com or wherever you get your podcasts.
Adopt US Kids presents What to Expect When You're Expecting. A teenager. Learning the lingo.
Today I'm going to help parents translate teen slang. Now, when a teen says something is on fleek, it's exactly like saying, that's rad. It simply means that something is awesome or cool. Another one is totes. It's exactly like saying, totally, just shorter. As in, I totes love going to the mall with Becca. Another word you might hear is jelly. Jelly is a shorter, better way to say jealous. As in, Chloe, I am like so jelly of your unicorn phone case.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care will think you're, rad, just the same. To learn more, visit adoptuskids.org. A public...
Ladies and gentlemen, I'm going to place an order to buy euro. Price I'm looking to buy 120.385. So if you follow my trades, you need to place an order at 120.385. Okay. I'll speak to you later.
Behind the wheel. Visit StopTextStopWrecks.org. A message brought to you by the National Highway Traffic Safety Administration, Project Yellow Light, and the Ad Council.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Fed Wednesday and the latest Fed Minute show Federal Reserve officials did not see the conditions for reducing their massive asset purchase program being met, quote, for some time at their January policy meeting. According to minutes from the January 27th meeting, quote, with the economy still far from those goals, participants judged that it was likely to take some time for substantial further progress to be achieved. Stocks trading mixed. Right now, the Dow is up 57 points, up 0.2%. S&P is down 7, drop there of 0.2%. NASDAQ lower by 105, down 0.7%. Treasury yields have touched a one-year high before pairing the increase. Right now, the 10-year yield 1.29%, up 5/30 seconds. Gold is down 1.2%, 17.73 the ounce. West Texas Intermediate crude up 1.6%, 61.05 a barrel on WTI. Natural gas up 2.7%, 321 per million BTUs. After the bell, we will be hearing from Applied Materials. Applied Materials shares down now by 2.6%. The Permian pipeline operator Oryx has declared a force majeure amid the cold. Force majeure, by the way, means I know we have a contract. It's just not happening. Charlie Pellet, Bloomberg Radio.
All right, Charlie, thank you so much. Really appreciate that. I got to get to a troubling headline, Tim. We talked about it yesterday, about the gaps in who is getting the vaccines around the U.S. It's something you guys talked about a lot on Quick Take today.
Yeah, it's not just an issue here in New York City. This is something that's happening throughout the country. There are patterns emerging.
Mm-hmm. Yeah,
Blacks and Hispanics are not getting vaccines at the same rate that white Americans are.
And we're tracking this at Bloomberg. We're tracking what's going on around the country. So let's talk about this for our daily check on the virus and vaccine rollout. Dr. Dr. Olajide Williams, Chief of Staff of Neurology at Columbia University. He's an NIH-funded researcher, a leading health disparities expert with research focused on community-based behavioral interventions. He's also the founder, president, and board chair of Hip Hop Public Health. I was spending and watching some videos last night. Bloomberg Philanthropies, by the way, has provided a grant to Hip Hop Health, and he joins us on the phone in New York City. Dr. Olajide, forgive me, first of all, I just can't speak any words, apparently, today. It is so nice to have you here with us. How are you? And tell me what you're seeing in terms of COVID and the vaccine rollout.
Well, the good news is in terms.
Okay. We filled the order, so position open on euro at 120.385. Just right here. Okay.
Trickle down, our admission rates trickle down, and we've been seeing that slowly but steadily. It's a welcome relief given my experience on the front lines at the height of the pandemic when it took New York City by surprise. But on another front, I'm actually very, very concerned about the vaccine coverage situation. As you led with in this segment, there are striking disparities, again afflicting those who suffer the most: communities of color, poor neighborhoods, disenfranchised Americans. They're the ones really who have borne the brunt of the COVID death and morbidity rates, and they're the ones now really not being engaged sufficiently enough and savvily enough to in a way that would enable increased uptake of the vaccine. We have to earn back trust, Kim and Carol. Trust was broken over hundreds and hundreds of years of quite frankly systemic inequities and structural racism, and great mistrust with the medical community, and we're seeing those effects now. So we have to be more creative, and we have to be more purposeful to earn back the trust of these communities so that we can get vaccination coverage rates up. Because the bottom line is, we're all in this together, and we are all connected. And if one link in this chain is not strong, then we won't be able to climb our way out of this pandemic.
Yeah, Dr. Williams, what is a good way to do that? What is the right way? What is the effective way to communicate the benefits of the vaccine and earn back that trust?
The way to do it is for me, is through partnership. Sincere partner. There are certain dynamics where a situation is called a partnership, but there's clearly someone calling the shots and the other person pretty much being overlooked. So what we need here is a real partnership between the medical community and the community, these communities of color. What I mean by that is we need to include them at the table. We need to work with the leadership in communities of color, with those who have been working on the front lines of health promotion on behalf of the community, those trusted individuals, whether it's a church pastor or a community advocate, or whether it's just a community-based organization, a CBO that's been doing great work and is trusted in that community. We need to identify these credible messengers, have them at the table with us, and decide together how to address this. Gone are the days of developing interventions in our own bastions of educational excellence and then serving those interventions on a tray to these communities. Now, that never worked, and that only served to increase these disparities. What we need to do now is to design the strategy in partnership with these individuals, because that's the only way that these approaches are more likely to be accepted, and they're more likely to be carried out. And so that's really the prescription. The good news is that I think that folks have recognized the importance of what we call community participation in decision-making and in planning and strategy. And I'm just hoping that we're not too late to the game.
Yeah, we are as well. Dr. Williams, sit tight for a second. We're going to do a little bit of news, but we'll come back to you. Dr. Olajide Williams, Chief of Staff of Neurology over at Columbia University, founder of Hip Hop Public Health. And I want to get into the work that he's doing also there, because it's pretty dramatic and pretty significant. We'll get back to him in just a moment. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. And this on a day where a lot going on, and we're getting some upbeat news about the virus, but yet a long way from being over.
Yeah, like I said, we're not out of the woods yet. I spoke with Dr. Amish Adalja on Quick Take earlier today. He said, despite the good news, we are not on the other side of this.
Yeah, exactly. All right, we'll get back to our latest on the COVID-19 in just a minute. This is Bloomberg.
Bloomberg Radio continues its market coverage well past the close of U.S. trading with Bloomberg Daybreak Asia tonight at 6 p.m. Wall Street time. Join Brian Curtis and Doug Krisner live from Hong Kong and New York tonight at 6 on Bloomberg Radio.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I'm Mark Crumpton with Bloomberg's First Word News. The European Commission has secured 300 million additional COVID-19 vaccines. The Commission has been under scrutiny for vaccine rollout deemed to be underwhelming.
The increased spread of the new COVID-19 variants first identified in the United Kingdom, South Africa and Brazil are a potential paradigm shift in the...
Plaintiffs say that he was not an amateur investor.
Yeah, I think this is an interesting story. It's going to get into it. It was filed, this case, it's a proposed class action against Keith Gill, who, as you said, has gone by Roaring Kitty online, as you said, more well-known that way than he is as Keith Gill. It was filed in federal court in Massachusetts. And what's interesting is he was definitely one of the public faces of the GameStop rally, but he is a chartered financial analyst. He has multiple broker licenses, was previously employed by Massachusetts Mutual Life Insurance. The lawsuit, by the way, also named Mass Mutual and a brokerage subsidiary of the company as defendants, saying they had an obligation to supervise Gill's activities in the market. But Gill, that is, was touting GameStop shares through an extensive social media presence on YouTube, Twitter, and Reddit. I mean, listen, this is the big question about that we're trying to get to the bottom of.
Yeah, in order to motivate amateur traders, Gill fashioned himself as a kind of Robin Hood and characterized securities professionals as villains, the lawsuit says.
Yeah, lots more to come on this one. All right, check it out at Bloomberg.com.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Bloomberg Business Week on this Wednesday. We're going to get back to Dr. Williams over at Columbia University. I want to find out a little bit more about hip-hop public health. We haven't really talked about it, but it's something he has created, and it really gets into minority communities about a lot of health issues. It's really fascinating.
Yeah, I'm eager to hear about that, and also more about this idea that we are all in this together. It's something that people say, but not necessarily in the context of the vaccine. And we do need everybody to take the vaccine, so we do reach that 75% threshold, because the vaccine is not 100% effective.
It's the only way it's going to work, ultimately. All right, let's get back, though, to your top business stories. Another check-in with Charlie Pellet.
Hi, thank you very much. A leg lower since our last update. Carol Masser right now, the S&P down 10. I'll give you the why in just a moment here. We've got the S&P down by about 0.3%. The Dow is up 35. That is a gain of 0.1%. NASDAQ down 130, a decline there of 0.9%. NASDAQ 100 index also down 0.9%. Bottom line here, stocks have paired losses. Treasury yields retreated from a one-year high as investors weigh the outlook for economic growth and inflation. 10-year yield 1.29%. Gold down 1.3%. 17.71 the ounce. And focusing on hydrocarbons, we have got West Texas Intermediate crude up 1.6%. 61.02 a barrel, and natural gas up 2.9%. 321 per million BTUs. The latest Fed minutes show Federal Reserve officials did not see the conditions for reducing their massive asset purchase program being met, quote, for some time at their January policy meeting. That, according to the latest minutes out 33 minutes ago. The European Union has finalized an agreement with Pfizer and BioNTech for 200 million more doses of their vaccine, locking in a second quarter supply boost as countries struggle to speed up their immunization drives. Pfizer shares now are up by 0.5%. BioNTech shares down 0.6%. In the U.S., a major concern remains people who are unwilling to get vaccines, creating an unwanted surplus. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
As soon as we get to the point where there's a significant amount of supply increase, and we've gone through our frontline healthcare workers, we've gone through our elderly populations that have been able to get it through things like long-term care facilities, a lot of us think that we're going to see a sort of a cliff where there's this drop-off of people who are willing to get it, and we're going to just be sitting on supply.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the other vaccine names that we track, AstraZeneca up now by 1%. Moderna is down 2.8%. Johnson & Johnson lower, little change, down less than 0.1%. Recapping equities mixed, S&P down 10, down 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to our guest, Dr. Olajide Williams, Chief of Staff of Neurology at Columbia University. He's also the founder, president, and board chair of Hip Hop Public Health. Bloomberg Philanthropies has provided a grant to Hip Hop Health, and he joins us, still with us, I should say, on the phone in New York City. Hey, one thing I want to ask you, Dr. Williams, and Tim and I were talking about it in the break. You talk about minority communities and their hesitation in terms of getting the vaccine. How much is hesitation, nervousness, and understandably because of, what we've seen, in history in terms of how minorities have been treated when it comes to the medical community? And how much is just an inability, if you're working all day, then you've got to get on a website and try to find, even just get signed up to take a vaccine. How much is also that it's just not an easy system to get it done?
Yeah, no, I think it's both. We know that from surveys of in communities of color, we know that hesitancy is a big component of this. That we're clear about. But another very important component is access. Lack of access to making appointments, difficulty navigating the vaccine enrollment system, whether it's online or whether it's via phone. Transportation to vaccine sites. A lot of individuals in the first waves have been the older individuals, 65 and above, 75 and above, and now folks with comorbidities. These are folks that are often older and might have, transportation challenges because they need a wheelchair or a walking aid. So access is definitely playing a very important role, and more so in communities where you have a high burden of comorbid illnesses. They're the ones least likely to want to travel to a destination to get the vaccine, and they're the ones that are in most need of having local community-based vaccination sites right next door that they can go to. So it's a combination of both, but there's no question, Kim and Carol, that the data is very clear that hesitancy is also playing a role.
So let's talk about your website and this organization that you've created, Hip Hop Public Health. It's very cool. I was watching videos last night about HIV and eating healthy, and you guys do it in a fun way. I mean, it's hip hop, it's a song, it's got lyrics, but it's also got really strong messages that I think, and I'm assuming, really stay with people. Tell me about this organization and the impact that you find that it's having and really reaching people.
Sure, thank you. So, Hip Hop Public Health was really born out of my frustration with traditional public health messages in the Black community. I felt that the penetration of these public health communication campaigns wasn't really sufficient. And a lot of the work we did working directly with community members confirmed this really poor translation of public health into the community. And they really came up with the suggestions for us to use a new model. And hip-hop really made a lot of sense, and it was really pushed and promoted by the youth that we were engaging around how best to do this. As a neurologist, Kim and Carol, I'm also really interested in music and its role in the brain. Yeah. A lot of people don't realize that music actually occupies more real estate, more neural real estate in our brains than language itself.
Wow.
Music augments learning. It augments our memories. Music creates positive associations. Music increases our attention. And music has such powerful neurological strengths and attributes that, it's one of the reasons why, if you think about how we learned our ABCs, we learned it through song. If you think about movies that we watch, right? If you think about Darth Vader, right? He's imminent. He's about to approach. Those emotions, the Rocky series. You think about that music that's played and how it connects with your emotion and it motivates you to go that extra mile when you're on the treadmill.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carl Master along with Tim Stenovic in our Interactive Brokers studio. So listen, this is definitely on our radar this week. Let's not forget, you've got the CEOs of Robinhood and Reddit, along with Ken Griffin of Citadel Securities and a few others. They're going to answer House lawmakers' questions about recent market volatility. We're talking about GameStop. We're talking about the meme stocks.
That's right. One of Griffin's businesses executed many of the trades that drove the retailer shares into the stratosphere last month, while another of his businesses provided a $2 billion lifeline to a hedge fund that got crushed by the stock surge. When this was happening a few weeks ago, there was a lot of confusion around what role Citadel had and the differences between Griffin's businesses, but it turns out it was a big role.
Right, exactly. And it's interesting, we're just starting to get more details about who all will be there specifically at that hearing. But I think, listen, we were talking about, the individuals who were not necessarily known by name, but known by, an interest.
Roaring Kitty,
Thank you very much. But we're out there talking about touting up certain stocks and then the, run up that subsequently followed. And I think we just need to kind of understand this new environment where people are talking about stocks and what, regulatory oversight is needed, what can be said, what can't be said. I don't know.
My big question tomorrow, Carol, and this is something I'm going to be watching closely, is to what extent do regulators actually, or lawmakers rather, have the ability to regulate what happened, right? Like, what could they actually do versus what are they prepared for their own remarks, their own line of questioning that's going to look good on social media, that their staff is going to clip and put on Twitter.
But I also think it also gets to that bigger, broader conversation that we've been having about social media. How much are the platforms ultimately responsible for what happens on there, right? We do it with Twitter, with Facebook. Yeah. We talk about it a lot. And then I do wonder whether it's Reddit or whether it's, Robinhood, what responsibility do those platforms have?
A completely different conversation that is also happening among Democrats and Republicans from different sides in Washington.
So it will be all over it, but those testimonies, I'm sure we'll all be watching very, very closely and listening very closely. You're listening to Bloomberg Business Week on Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Another record for Bitcoin, breaking through $52,000 right now. Bitcoin at $52,224. Bitcoin today up by 7.5%, but worth repeating the headline. Bitcoin now crashing through 52,000. Stocks paring losses. Treasury yields retreating from a one-year high as investors weigh the outlook for economic growth and inflation on this Fed Wednesday. 10-year yield 1.29%, up 6/30 seconds. Gold is down $22 the ounce at $17.72 the ounce, down 1.2%. West Texas Intermediate crude up 1.2%. 1.8%, 61.10 a barrel. Natural gas up 2.7%, 321 per million BTUs. Equities trading mix now with the S&P down 6, a drop there of 0.2%. The Dow up another 70, up 0.2%. Nasdaq down 112, a drop there of 0.8%. Lots of earnings after the closing bell. We'll be all over them as they break. Applied Materials, TripAdvisor, Dropbox, and Roku among the companies reporting their latest earnings. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and I'm Carol Master along with Tim Stanovic.
Yeah, hi.
Hi. Oh, okay. I wasn't sure if we had a toss here. Do we have a special report here? No. Okay. Okay. So the gig economy is here. We know that. It's also perhaps on a bigger mission, Tim, thanks to a big and recent vote in California.
Yeah, that's right. And right now we have Joel Weber, editor of Bloomberg Business Week, joining us on the remote from Brooklyn, and Josh Idelson, labor reporter at Bloomberg News, who joins us on the phone from San Francisco. In the latest Bloomberg Business Week report, the gig economy is coming for millions of American jobs. Josh, or Joel, excuse me. This was a fascinating read because we were talking about this on our call this morning, and Prop 22 in California got so much attention, and we're all wondering what ended up happening after the vote. What are the effects of it?
Well, and we're only beginning to sort of get a sense of what that looks like, and that was sort of the question that Josh, being the wonderful labor reporter that he is, set out to sort of attempt to answer. And his reporting, as I'm sure he'll share with us here, took him to a lot of places, both at gig companies like the Ubers and the Lyfts of the world, but also to the other side of the table with labor. In general, I just think this area that Josh has been reporting on all year is like one of the most important actually in the pandemic, which is the relationship between employees and employers. And what Prop 22 really showed was that there's this alternative version of work where companies can basically not have people on their books. They become contractors. And Josh, turn it over to you here. Where could that go? What did your reporting find out?
So there's a lot of discussion these days about the gig economy and a so-called future of work, but part of what I wanted to get across in this story is the core of this fight has been going on for as long as we've had labor law in the U.S. There have always been companies trying to make fewer and fewer laborers actually be covered by labor law by poking and stretching loopholes in it. And at one time, the fight was about William Randolph Hearst's Newsies. Now we see it most prominently discussed about workers like Uber drivers, but in sectors from construction to teaching to mixed martial arts, you have workers and companies squaring off about whether those companies have enough control over the workers to be legally responsible for them. And we've seen executives and investors look to all sorts of sectors as places where the Prop 22 model would be appealing to them, to have what they would say is a more flexible arrangement. And what some workers worry would mean having the rug pulled out from under you, that you don't have basic guarantees anymore, like being paid for each minute that you're working.
So give us some examples of this, Josh, because I think a lot of people think about it from the perspective of people who are in the, ride-hailing, ride-sharing industry, those folks who drive for Uber and for Lyft, maybe people who deliver groceries for a company like Vons, for example, as in your story, or deliver food from restaurants like Grubhub. Where else could we see this?
Well, this trend of companies trying to get work done by people without having them on their payroll, we see it in all sorts of sectors. I talked to David Weil, who ran wage and hour enforcement under President Obama, who pointed out it's a trend that has in some ways moved up the wage scale, that we may associate it more with places like logistics, but it's happening in healthcare, it's happening in various sorts of service, it's happening in the government and in nonprofits as well.
You know, what's interesting, and I got to say, Josh, you were on earlier on Bloomberg Television, and Matt Miller put out a question. He said, how did this happen? California, it's a progressive state. We looked at California to kind of figure out the ethical and right way forward, right, with quotes around it. But so how did this get through California?
One factor here was that the companies way outspent the opposition and outspent the spending on every past ballot measure. They spent $200 million to get across a message in ads and other places. They were also able to put the message in their own apps. And part of that message was that this was necessary for many of the people doing the work to get to still do the work, which sends a powerful signal.
So Josh, now that we've seen the success that, this business model was on the ballot with Prop 22, and now that the companies have seen the success that they were able to basically appeal to voters, and that voters back them up on it, what does that mean for organized labor, and where this conversation could go nationwide?
Well, both the companies and the unions are in a tricky position here with opportunities and threats that were created by the November election, where on the one hand, Prop 22 passed, and on the other hand, you now have a narrowly Democratic Congress and a Democratic president who campaigned on being someone who was against Prop 22 and in favor of making it harder for companies to claim workers were contractors. And so the companies have pushed for something like Prop 22 to be a model, but what this story digs into is that at the same time, those same companies are signaling they would rather not have to square off over and over with unions. They would rather cut a deal and find a way to no longer be at war with these unions, but get to continue classifying those workers as not employees.
Well, it's an important story and certainly something that is so relevant right now. Josh, thank you so much. Josh Idelson, labor reporter at Bloomberg News. Find that story online. And of course, our thanks to Jill Weber, editor at Bloomberg Business Week. We need to remind everyone, of course, February is Black History Month. And throughout the month, Bloomberg will be celebrating pivotal moments in U.S. Black history. Here with more is Bloomberg's Renita Young.
On this day in Black history in 1891, Albert Richardson patented the butter churn. Up until then, anyone who wanted butter had to make it by hand in a bowl. But Richardson's invention would eventually make it easier to make butter and forever change the food industry. Throughout his life, Richardson had a habit of seeing a problem and then inventing a solution. One such problem he saw was the way dead people were buried. At the time, it was in shallow graves or lowering caskets with ropes into a deeper hole. And this required several people to work in unison, which wasn't always possible, and it could result in damaging the casket. So in 1894, Richardson patented the casket lowering device, and it's used in all cemeteries today. Richardson also invented the home fastener, an insect destroyer, and an improved design of the bottle. That's today in Black history. I'm Renita Young, Bloomberg Radio.
And a big thank you to Bloomberg's Renita Young. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, February 17th. It is a Fed Wednesday. Right now, stocks are trading mixed. 1 hour to go ahead of the closing bell, with the Dow Jones Industrial Average up 79 points right now, up 0.3%. S&P is down 7, a drop of 0.2%. NASDAQ down 118 for the NASDAQ Composite Index, a drop right now of 0.8%. Bottom line here, stocks are paring losses. Treasury yields retreating from that one-year high as investors weigh the outlook for economic growth and inflation. Benchmark 10-year did climb as high as 1.33% before paring that increase. 10-year now at 1.29%, up 5/32. Gold down $22 the ounce, a decline of 1.2% to $17.72. West Texas Intermediate crude up 1.9%, $61.16 a barrel. Natural gas now at $3.23 per million BTUs. Nat gas up today by 3.3%. The Federal Reserve has issued minutes of the central bank's January policy meeting, and with that story, here's Bloomberg's Vinny Del Giudice.
The Fed has maintained a near-zero interest rate target since the coronavirus paralyzed the economy. The minutes say the latest round of government pandemic aid, along with COVID-19 vaccines, will provide a sizable economic boost. The minutes also say it'll be some time, which our Fed reporter sounds like a good long while, before the Fed tapers bond purchases aimed at bolstering the economy. Vinny Del Giudice, Bloomberg Radio.
Americans are spending big time. U.S. retail sales surged in January by the most in 7 months, suggesting fresh stimulus checks helped spur a rebound in household demand following a weak fourth quarter. Among some of the retailers today, Walmart shares up 0.6%, Target up 1.6%, Macy's down 2.2%. Recapping S&P down 5. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so one of our top stories at this hour, we've got another winter storm heading for the eastern central U.S., so it's threatening to bring more snow to the northeast and icy rain to the southern states already, Tim, enduring power outages amid a very deep freeze.
Yeah, and one person who has been in that deep freeze is Rachel Adams-Hurd, oil and gas reporter at Bloomberg News. She joins us on the phone from Houston. Rachel, I'm really glad to connect with you because on Quick Take this morning, we wanted you to come on to give us the latest from Houston. You emailed us early this morning. You said you had no power. You had 1 bar left on your cell phone. How are you doing?
I still don't have power. I still have 1 bar on my cell phone. I was able to do a quick charge in the car earlier today, but it's been a pretty cold, dreary, rainy, sad day. Luckily, I still have water, which has become kind of today's unique crisis. A lot of friends and family had their water cut off this morning. Some had their pipes explode. And we're actually supposed to be boiling our water right now, but we don't have power. So a lot of people are just kind of out of luck when it comes to water.
You've been advised to boil your water because it can be contaminated right now?
Right. The pressure is so low that the entire city is under a boil notice. And so is Austin at this point. And I haven't been able to check Dallas recently, but they might also.
Well, I feel for you. I've got a bunch of family throughout Texas and different cases where either a generator is being used or people are going through rolling power, blackouts like you're dealing with, it sounds like. So what I'm curious, Rachel, is how did this all happen? It's something Tim and I talked about. I know he talked about it on Quick Take. We certainly talked about it on Bloomberg Radio. You've got a story out that you talk about the Black Swan blackout. There were a lot of things that went wrong at once. Just walk us through them if you could.
Yeah, I mean, I think especially when you're sitting in the cold without power, you don't know what you're going to do about water. Everyone's kind of grasping for that one answer to what happened to allow this to happen to so many people in the state. And the kind of unfortunate and scary truth is that it's this confluence of factors that are going to take a long time and a lot of money to address, which is why we didn't address them last time that our grid was tested like this, which was a decade ago in 2011. And so you had natural gas freeze-offs at the wellhead all the way, in the Permian Basin in West Texas. Then you had power plant failures. You already had a lot of capacity that was offline because these plants were undergoing maintenance, ironically, for summer demand. And then you had all of these, lines being down because of the ice and that kind of thing. And at the end of the day, you just had this massive strain on the system, and we just weren't prepared for this at all.
So what does the immediate future look like for you and the millions of other people who have been affected by this? What does the next 48 hours look like?
I think that's what's so scary to so many people is we don't know. We don't have an answer. Monday we were told, if you don't have power that afternoon, you probably weren't going to have it until tonight. And then that stretched into Tuesday. And now I didn't lose power until last night, but I haven't gotten it back at all since it went out. And like I said, the issue today for a lot of folks is not electricity, but it's water, which is, if you don't have water for 2 days and you didn't know that you were supposed to be buying bottled water because no one told you, that's a dangerous situation.
Well, and something you point out in your story, that it's not that everybody knew this exactly was going to happen, but they knew a storm was coming and they knew it was going to be something that Texas doesn't usually deal with. So, how bad was it in terms of people saying, listen, folks, you need to plan for X, and it just didn't happen?
That's what I think so many Texans are frustrated over, is especially in Houston, we know how to storm prep. It's like a well-oiled machine. When you know there's a hurricane coming, you do your run to Home Depot, to HEB, you stock up on bottled water, on non-perishable food items, and you prepare for a week, 2 weeks, sometimes, God forbid, 3 weeks without power. But no one said that was likely to happen. And, covering energy, I had somewhat of a unique perspective in that I was hearing from folks on Friday saying, this looks pretty crazy. And at the time, even I, having that in my ear, was like, okay, well, if we're not hearing from regulators and leadership that we really need to be preparing for something that's bad, that all these folks need to be so worried about, could it actually be that bad? And clearly we're seeing that it is.
So, there's a lot to that in terms of finger pointing about wind power going down and so on and so forth. But when we get into the systems, what ultimately really failed?
I think what is so terrifying is that it was a system-wide issue. It's the way that our grid is set up, the way that we depend on, frankly, the fact that we consider natural gas to be 100% reliable and foolproof. And then when you have something as severe as this, that's just not the case. And I talked to a couple energy policy experts yesterday who said that was actually the biggest surprise to them, folks who watch this every year, every day, was that natural gas was not the one that was able to perform in light of these temperatures. And I think that's what's also frustrating to folks who are watching all of that play out online, if they're able to get online, is that it's this wind versus gas argument, when in reality it's much more complicated than that, and there's not one sexy answer. But I think that's what, as a state, we're going to need to think about after this event is over, is how do we actually want to address the situation, because a lot of people are going to want answers.
7, 8, 9, 10. Go ahead.
No, go ahead.
Well, we only have 30 seconds left, Rachel. What is the solution? I know it's complicated, but as an energy reporter, what is the way to make sure this doesn't happen again?
It's going to be
it's money. It would require tons of investment on all aspects of the supply chain. Everywhere from making sure the pipes and infrastructure on the upstream side of things and production are set up to withstand these temperatures, to power plants, and then at the end of the day, whether our homes are able to protect against weather like this.
Yeah, exactly. And as you say in your story, natural gas playing an outsized role in the disaster. Listen, they are the Lone Star State. They like being the Lone Star State, but being on your own power grid is going to have problems.
As we've seen. And look, I think what we have to keep in mind is that Texas is a place that doesn't get weather like this. People aren't prepared for it. They don't necessarily have jackets. They don't have snow plows. They don't have salt for the roads. It's a domino effect.
Extreme weather, but not extreme cold weather. And it certainly has implications. Rachel Adams-Hurd, you're amazing. Oil and gas reporter at Bloomberg News. Stay safe on the phone there in Houston and dealing, obviously, without power. Let's get back to world and national news. Nancy Lyons following this and much more. She's in D.C. Hey, Nance.
Hey, Carol, it was just over a year ago that Rush Limbaugh made this announcement on his radio talk show.
I have been diagnosed with advanced lung cancer.
He lost his battle to the disease today at the age of 70. Limbaugh's influence was credited with helping the Republican Party regain control of the U.S. House in 1994. He also helped persuade former President Trump to flip-flop in 2018 and veto a funding bill that didn't provide money for the border wall. Today, the former president reacted to the news on Fox.
He was a fantastic man, a fantastic talent, and people, whether they loved him or not, they respected him.
Well, the power crisis afflicting Texas and the central U.S. is worsening, leading to questions about the management of the Texas electric grid and furthering debate on renewables versus fossil fuels.
Other parts of the nation have spent the money to winterize their grid. Bill Richardson, former energy secretary and governor of New Mexico, said in a Bloomberg interview.
We have to improve our electric grid, and you need investments in cold protection in the grid. And wind is operated well. The cost is going down. The technology gets better. The same with solar. But don't say that you're going to eliminate natural gas.
Richardson endorsed a national policy to accelerate the transition to renewable fuels and decelerate climate change. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, along with Tim Stenovic. And I got to say, our desk giving us a heads up a little while ago and just saying that the House panel that will be looking into GameStop and the volatile trading that we saw a few weeks ago, releasing the prepared statements of some of the individuals who will be there, including Tim, the head of Robinhood Markets, the CEO.
Yeah, that's right. Vlad Tenev saying in prepared remarks that, quote, what we experienced was extraordinary. Robinhood's Tenev to say that buying surge in January was, quote, unprecedented. And he also says that Robinhood didn't help hedge funds to customers' detriment. The company also saying, the CEO, Vlad Tenev, saying that it didn't help hedge funds at clients' expense either.
Yeah, and it's interesting because I'm looking at his testimony and it's just on a government website. But, you know, keep in mind that this is something we're going to be following very closely. Tomorrow is the hearings that are going to be looking into this. But he talks about the Robinhood story, born in Bulgaria, a country with a financial system that at the time was not accessible to ordinary people. And he stresses that later on, that part of what Robinhood's mission was to open it up much more to individual investors and have more access like sophisticated or institutional investors have.
But also making sure that he makes a point that you can't do everything on Robinhood's app. He does say, and he plans to say this tomorrow, customers can invest in over 5,000 securities on Robinhood Financial's brokerage platform, including U.S. equities and ETFs listed on U.S. exchanges. Importantly, there are some activities and products that are not available on the Robinhood platform. They do not offer certain products that may carry a higher risk profile, like uncovered options contracts and over-the-counter bulletin board stocks.
We mentioned earlier one of the most read stories, Roaring Kitty sued for securities fraud over GameStop rise. Roaring Kitty, lesser known as Keith Gill, he also, his prepared testimony coming out, and he says, before I go further, I want to be clear about what I am not. I am not a hedge fund. I do not have clients, and I do not provide personalized investment advice for fees or commissions. I'm an individual investor, and my investment in GameStop and my posts on social media were entirely my own.
There are going to be a lot of eyes on this tomorrow. This
Yes.
is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Bitcoin takes out 52,000. The Dow is at a record. S&P, NASDAQ, both lower. Let's head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading mixed right now. The Dow currently up 100 points. S&Ps are down 5. NASDAQ is lower by 108. The U.S. 10-year yield at 1.29%. Gold is down 1.2%. And transports fall 100 points. Among the main 11 S&P sectors, leaders were energy and consumer discretionary. Tech and industrials were under pressure. And leaders to the upside in the Dow were Verizon and Chevron on the Buffett stake news, while Apple led to the downside. After earnings, Shopify fell as much as 8.8%. And in other news, Wells Fargo spiked intraday on a report that the Fed has approved the bank's overhaul plans. Wrapping things up, Baidu, Fastly, and Hyatt all report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over at Bloomberg, type squawk, S-Q-U-A-W-K, on your terminal. I'm Charlie Pellet. That, my friends, is a Bloomberg Business Flash.
All right, Charlie, really appreciate that. So it is, I believe, still the most read story on the Bloomberg terminal and has been since it hit early this morning. It's about the 93-year-old who waged war, Tim, on J.P. Morgan and her own grandsons.
I couldn't stop reading this morning when I started it. And like you said, Carol, this has got to be like a Netflix movie.
Right? Streaming very soon. Let's get more from Tom Schoenberg. He is Bloomberg News financial investigations reporter. He joins us on the phone in Ashton, Maryland. Tom, it is an amazing read. It's not fiction, it's reality. So tell us about the 93-year-old.
Sure. Thank you. How much time do we have?
I know. We could sit with you for the next hour or two or three. All right.
But yeah, so Beverly Schottenstein, she's part of the family that's pretty well known, the Schottensteins from Columbus, Ohio, that kind of made their fortune kind of through furniture empire. People are probably familiar with Big Lots. And then it even expanded into American Eagle Outfitters and such. Her branch of the family kind of, cashed out with a good settlement a couple decades ago. And really, she was trying to manage this money, through her family. She's been widowed since the mid-'80s. And she, about a dozen years ago, decided to allow her grandsons to manage her money. And they, made the move to J.P. Morgan. And what this story is really all about is she, accuses them of really putting her money in sort of in risky investments that were running up, big commissions for themselves.
I'm placing a stop on profit for euro at 120, 40.5. Okay. So stop on profit goes right here. So you need to place your stop on profit if you follow this trade, so you will not lose your money. Speak to you later, guys.
Live in aid, bounce, and when she went to the bank to see that, she saw all these other charges. And the real tipping point was a package showed up at the house around the holidays when there were family in town, and they took a look at it, and it was a private equity fund that she was committed for about $5 million for several years, maybe as many as a decade, and that really set off alarm bells with other members of the family who really didn't know kind of what was going on in her sort of behind the scenes.
Tom, it's not widows and orphans, right? It's not that kind of an investment when you're talking about a PE investment.
It's true. But I think what really winds up happening is, a number of family members who didn't really quite know what was going on with their grandmother's estate start seeing this, and she herself was having a lot of concerns about how things are managed, and there was bank statements had stopped coming to the house. She didn't know what that was about, and as they started to peel it back, there were all sorts of allegations about her grandsons her grandson coming into the house and shredding documents and such. So all these things just kind of started to spill out. And, she eventually just made the decision that she was going to bring an action against her grandsons and J.P. Morgan before the Financial Industry Regulatory Authority, which is the kind of where you go to resolve, investment disputes with your brokers. And so she brought all this before that commission, which recently ruled in her favor all around, finding that, the grandsons as well as the bank were liable for, breach of fiduciary duty, misrepresentation, and then, also there was liable for elder abuse.
So she won.
She did. Now she was seeking as much as $69 million from this, which was kind of adding up all the various ways that she, her lawyers thought she, should have made money during this time period. They wound up, this three lawyer panel wound up ruling that it was going to be more in the line of like 19 million split up among the bank and the grandsons.
So what are the consequences for the grandsons apart from having to pay, and the consequence for J.P. Morgan Chase?
Sure. So the grandsons, they both lost their jobs shortly before she filed her claim in 2019, and there is, according to what my sources in the story, is that there is an actual sort of FINRA enforcement investigation, which could lead to you losing your license to sell securities and such. And then also she, there's also another sort of investigation underway by the Manhattan District Attorney's Office. They had made some inquiries in this. And in terms of J.P. Morgan, they were hit with the penalty, and they themselves, the bank said that look, we dismissed these guys, and they don't, that was kind of the statement we received, that they sort of, these guys didn't uphold the values that J.P. Morgan says it has.
Well, and it just makes lots of questions about oversight and, who is watching what. Tom, it is an incredible story, and it's a great read, and we'll put it out on Twitter. And we've had some great video that's been running for our folks watching on YouTube, but it is incredible.
Yeah, if you haven't read it, go check it out right now. Again, I could not stop reading it this morning when I started.
All right, Tom Schoenberg, he is financial investigations reporter at Bloomberg News, on the phone from Maryland. And like we said, we're going to put out his story on Twitter. All right, coming up next, we've got the chart of the day, and then we'll count you down to that closing bell on this Wednesday. You're listening to Bloomberg Business Week, watching on YouTube. Carol Master, Tim Stanovic, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com.